remember George Washington, you know how he died? Well-meaning physicians bled him to death. And this was the most important patient in the country, maybe in the history of the country. And we bled him to death, trying to help him. So when you're actually inflating the money supply at 7%, but you're calling it 2% because you want to help the economy, you're literally bleeding the free market to death. But the sad fact is George Washington went along with it because he thought that they were going to do him good. And the majority of the society, most companies, most conventional thinkers, the working class, they go along with this because they think that someone has their best interest at mind. And the people that are bleeding them to death believe that prescription because their mental models are just so defective.
Saylor has been one of Bitcoin's most outspoken advocates, and MicroStrategy is among the world's largest publicly traded corporate owners of Bitcoin. Recently, Bitcoin volatility and price fluctuations have concerned many investors worldwide, but according to Saylor, it's one of the best things happening for Bitcoin. Let's find out why in this video. Hello and welcome to Money Talks. In today's video, Bitcoin bull Michael Saylor talks about variations in Bitcoin price, volatility in the space, government regulation, and the role of Bitcoin in wars and global financial crisis. So without wasting any time, let's dive right into the video.
So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property.
What does that mean in terms of price per coin?
At 500,000, right? That's a $10 trillion asset. At 5 million, that's a $100 trillion asset.
So you think it crosses 1 million, it can go even higher?
Yeah, I think it keeps going up forever. I mean, there's no reason it couldn't go to 10 million a coin, right? Because digital property isn't the highest form, right? Gold was that low frequency money. Property is a mid frequency money. But when I start to program it faster, it starts to look like digital energy, and then it doesn't just replace property. Then you're starting to replace bonds. Right? There's 100 trillion in bonds. There's 50 to 100 trillion in other currency derivatives. And these are all conventional use cases, right? I think that there's $350 trillion to $500 trillion worth of currency derivatives in the world. Mm-hmm. And when I say that, I mean things that are valued based upon fiat cash flows. Any commercial real estate, any bond, any sovereign debt, any currency itself, any derivatives to those things, they're all derivatives, and they're all defective. And they're all defective because of this persistent 7 to 14% lapse, which we call inflation or monetary expansion.
What do you think is the high point it's going to hit?
I think it'll go up forever, right? I mean, I think the Bitcoin is going to climb in a serpentine fashion. It's going to advance and come back, and it's going to keep climbing. I think that the volatility attracts all the capital into the marketplace. And so the volatility makes it the most interesting thing in the financial universe. It also generates massive yield and massive returns for traders. And that attracts capital. Like we're talking about the difference between 5% return and 500% return. Mm-hmm. So the fast money is attracted by the volatility. The volatility has been decreasing year by year by year. I think that it's stabilizing. I don't think we'll see as much volatility in the future as we have in the past. I think that if we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. But gold is defective property. Gold is dead money. You have $1 billion of gold that sits in a vault for a decade. It's very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost.
Okay, so one of the fascinating things about Bitcoin, and sorry to romanticize certain notions, but Satoshi Nakamoto, that the founder is anonymous. Maybe you can speak to whether that's useful, but also I just like the psychology of that, to imagine that there's a human being that was able to create something special and walk away. So first, are you Satoshi Nakamoto?
I'm certain I'm not.
Um,
No, I think the provenance is really important. And if I were to look at the highlighted points, I think having a founder that was anonymous or pseudonymous is important. I think the founder disappearing is also important. I think that the fact that the Satoshi coins never moved is also important. I think the lack of an initial coin offering is also important. I think the lack of a corporate sponsor is important. I think the fact that it traded for 15 months with no commercial value was also important. I think that the simplicity of the protocol is very important. And I think that the outcome of the block size wars is very important. And all of those things add up to common property. They're all indicators of a digital property as opposed to security. If there was a Satoshi sitting on top of $50 billion worth of Bitcoin, I don't think it would cripple Bitcoin as property, but I think it would undermine its digital property. And if I wanted to undermine a crypto asset network, I would do the opposite of all those things. I would launch one myself. I would sell 25% or 50% to the general public. I would keep some of the initial, I would pre-mine some stuff or early mine it, and I would keep an influence on it. Those are all the opposite of what you would do in order to create common property. And so I see the entire story as Satoshi giving a gift of digital property to the human race and disappearing. We're 13 years into this entire activity. I think the risk has never been lower. If you look at all the risks, right? The risks in the early years is the engineering protocol proper? Like 1 megabyte block size, 10-minute clock frequency, cryptography is first, will it be hacked or will it crash? 730,000 blocks and it hasn't crashed. Will it be hacked? Hasn't been hacked. But, it's a Lindy thing, right? You wait 13 years to see if it'll be hacked. But on the other hand, with $1 billion, it's not as interesting a target as it is with 100 billion. And when it gets to be worth $1 trillion, then it's a bigger target. So the risk has been bleeding off over time as the network monetized. I think the second question is, will it be banned? You couldn't know. It literally could have been banned at any time, many times early on. In fact, in 2013, I tweeted on the subject. I thought it would be banned. I made a very infamous tweet.
Yeah.
I thought it was going to be banned. In 2014, the IRS designated it as property and gave it property tax treatment. Okay, so they could have given it a tax treatment where you had to pay tax on the unrealized capital gains every year, and it probably would have crushed it to death, right? So it could have been in any number of places banned by a government, but in fact it was legitimized as property. And then the question is, would it be hacked or would it be copied? Will it be something better than that? And it was copied 15,000 times. And you know the story of all those. And they either diverged to be something totally different and not comparable, or someone trying to copy a non-sovereign bearer instrument store of value found that their networks crashed to be 1% of what Bitcoin is. So now we're sitting at a point where all those risks are out of the way. I would say that year one of institutional adoption is it started August 2020. That's when MicroStrategy bought $250 million worth of Bitcoin, and we put that out on the wire. We were the first publicly traded company to actually buy Bitcoin. I don't think you could have found a $5 million purchase from a public company before we did that. So that was kind of like a gun going off. And then in the next 12 months, Tesla bought Bitcoin, Square bought Bitcoin. And I'd say now we're in year 2 of institutional adoption. And there are about 24, should be 24 publicly traded Bitcoin miners by the end of this quarter. So you're looking at 36 publicly traded companies, and you've got 50, at least in the range of $50 billion on the balance of Bitcoin on the balance sheet of publicly traded companies.
Bitcoin bull Michael Saylor revealed his intention of continuing the Bitcoin strategy in a letter sent to MicroStrategy's stockholders. The CEO also promised that MicroStrategy, the publicly traded company with the most number of Bitcoin holdings, would continue to buy more BTC and provide its software intelligence services to a wider customer base. The world's biggest Bitcoin holder, MicroStrategy, paid an average price of around $30,700 each to buy 129,218 tokens of the most popular crypto asset, the company's CEO and chairman Michael Saylor informed in his recent letter to the stockholders. The value of each of these crypto assets as of today is around $40,000. The MicroStrategy CEO also said that the company's Bitcoin strategy has been a tremendous success. Saylor said MicroStrategy would continue to increase awareness of its Bitcoin strategy. He also said that Bitcoin could disrupt the commercial real estate market, as people use the asset as an alternative store of value to a second home, taking Bitcoin's market capitalization as high as $100 trillion. So, do you agree with Michael Saylor that Bitcoin can go to $1 million per coin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.